This is why 99% of homeowners won't pay their home off early. The banks want you stuck in a 30-year mortgage, paying them back interest forever. Even with a low interest rate, you could be overpaying by tens of thousands of dollars. Watch this video to learn how to pay your home off in about 5 years, and make sure to save this video. Here's an example of another client utilizing our first lien HELOC strategy to pay off their home and get out of debt fast. We're going to be refinancing their primary residence. They currently owe about $500,000. Their home is worth $625,000. They have an interest rate of about 6.125%. This couple makes about $15,000 a month, and they're not too liquid, so they've only got about $10,000 in checking and savings right now. After they pay all their expenses for the month, they're left over with about $6,000. A lot of their money goes back into the stock market, so we can actually move this number up or down for them, but we're going to run with 40% for now. In their current loan, it would take them 28 years to pay off the mortgage. They're going to pay back their bank about $1 million if they kept their loan out for the full 30-year term. The problem with a lot of people that are in this scenario is that they have a 6% or a 7% interest rate. The minute interest rates drop to 5%, they're going to refinance, and then they would revert their mortgage back from the 28 years that they have left. In most cases, they're going to go back to a 30-year mortgage, and they're going to start this interest clock all over again. Here's the advantage to our Home Select product. We're taking that same $500,000 balance. We're going to pay it off in 68 months. We're going to save them $429,000 worth of interest. $400,000 worth of interest that they don't have to pay back to the bank. We're still paying back about $127,000 worth of interest over these 5.7 years. That gives us an equivalent of an APR on our effective rate of 1.5%. And if you guys don't know the difference on how banks make their money, on a traditional mortgage, they front load the interest. On a 30-year mortgage, they're probably front loading it for the first 12 to 13 years. So you can see in our loan, in month 68, our house is completely paid off. In a traditional mortgage, you would still owe $463,000 and you've only paid down $46,000 worth of principal.